All right, folks, happy Wednesday. We're here with Dr. Kirk Elliot. He's our financial guru, going to take us through our economic outlook for this week. And so we were just talking about how Jerome Powell was talking about possibly higher interest rate hikes. And then that got the markets kind of wavery, wobbly, like we have talked about before, and really reacting to that news. So what can we expect, do you think, through the remainder of this week?
So, I mean, yeah, wobbly is just a great word because there's so much uncertainty and trepidation, right? But here's where Powell was just being grilled by Pocahontas and others, right? And it's like, no, you have to, you can't keep raising these rates, right? Because it's hurting people. It's like, but here we go. He has to raise rates to slow down inflation that they're creating, right? So here's the problem that Powell has, and the problem that he created, right, by the interest rate policy. So the real basically root cause of inflation is printing of money. You create all this money, right? And it takes more of those devalued currency units to buy anything that's a valuable good or service, right? So that's what inflation is. Inflation is nothing more than an increasing money supply. Well, they're printing money like there's no tomorrow to fund every stimulus program under the sun, raise the debt ceiling, you name it, printing it, right? But they're not giving it to the people, because the money supply in the banks is decreasing. So what are they doing with all this money they're printing? Well, they're used to try to stimulate the economy, raise the debt ceiling, and everything else. So here's where Powell is stuck, because for 8 months or so now they've been raising rates, all the way up to 0.75 of a point increase in a month, and then it started the last few months. They started to taper the growth down to 0.5 point and down to 0.25 last time, because they said they're winning the war on inflation. Well, now they've got a problem, because inflation over the last 30 days has gone up 0.5%. It's like, wait a second, we're raising rates to slow it down, and we've been telling everybody that this is the case. So now moving forward, they're going to have to raise rates and probably increase the rate of the hikes. So I bet next time we're going to see a 0.5 point increase instead of 0.25. And that would, so there was an article in Fortune magazine a few days ago talking about how Fed officials are dropping big warnings that they could raise rates more than expected as inflation stays stubbornly high. See, they've got this problem because inflation is going to stay stubbornly high because they keep printing money. But politicians like Pocahontas, they don't look at the right side of the balance sheet, right? So Powell is saying, well, to me, the fact that inflation is persisting and people can't afford to pay their rent, to pay their mortgage, to heat or cool their houses, to pay for groceries, to feed their families, right? That's a bigger issue than the rising cost of debt. I mean, they're both awful because we're in debt up to our eyeballs, right? But by him saying we're going to raise rates to slow it down, he's telling us what's more important in his eyes, and that's we've got to stop inflation, because he knows the ramifications if they don't. If they stop inflation, we're no different than Venezuela, Argentina, Cyprus, Greece, where you've had runaway hyperinflationary scenarios. So here's the policymakers, Pocahontas, grilling them on this, right? And it's like, okay, what would you do if in your family you're looking at your budget, you're looking at your balance sheet, and at the end of every month it's like, well, crud, we're spending $6,000 a month, but we only make $4,000. What would you do? You would sit down with your husband and say, okay, we've got to stop our spending, right? Because the income is there. You've got your job. You just kind of know what your income is, so you stop the spending. Here's the problem with politicians, okay, is they look at those same numbers. They brought in $4.8 trillion last year in federal tax revenue, but they spent $6.8 trillion. Okay. So they spent a couple $1 trillion more than what they brought in. So they don't look at it the same way that we do, because they have a printing press. They never say we're spending too much money. They say we're not making enough, so let's raise taxes. And if we can't raise taxes because that's politically unbearable, let's just print more money, right? So they never actually address the real issue, which is they're spending too much money. We don't have an income problem. We make $4.8 trillion a year as an economy. We have a spending problem. We spend like drunken sailors, right? So here's the problem, and Powell has to continue to raise rates. Yeah, there's the other reason why, because not just does it slow down inflation, but you've got foreign capital inflow coming into our country from other countries that want to buy our U.S. treasuries. If we're printing money like there's no tomorrow, treating it like monopoly money, why would you want to invest in it, right?
Right.
The basic rule of investing, if there's a higher risk, you need a higher reward. So with all of our U.S. treasuries being junk, basically, because they keep printing, well, you've got to entice foreign capital inflow, other investors, other countries to say, hey, we're going to give you a higher return for the risk that you're taking by investing in U.S. treasuries. It's another reason why interest rates have to go up, because there's no foreign capital inflow coming anymore because they've gotten rid of the petrodollar, right? It's not they. Who's they? They is Saudi Arabia, Russia, BRICS countries, China. They're getting rid of the petrodollar. They're dismantling it, right? So this is all part of the narrative that we're seeing, and the reason why interest rates have to go up after Powell's statements, within the last couple of days. So you've got that going on. Plus, you've got this major slowdown in the economy. So how do you know where the economy is heading, moving forward? Well, the first thing that goes is people that are strapped for capital, right? It's basically your subprime lending, the people who don't have good credit because they're really truly living at the margin, right? So just yesterday, the numbers came out. The people who have subprime auto loans, highest delinquencies since the year 2009. We surpassed that, right? So that's the worst it's ever been. So don't tell me, Biden, that your economy is good and wages are going up and inflation is coming down when people can't afford to make their payments, right? So what else is happening? Then another set of numbers came out yesterday was number of new home applications. People wanting to buy new homes, the lowest it's been in 28 years, right? So because as interest rate up, you can't afford the payments on it. And with wages coming down, inflationary pressures, people don't have a lot of extra money left at the end of the month. We're not going to buy a house. We can't afford to buy a house, or we have to buy a smaller house, or the people selling their houses have to lower the price to get people to qualify for them, right? So this real estate decline that we're seeing is going to be a big one. And it's not going to end anytime real soon.
Right? Threatens to get even worse with what they're talking about with the interest rate hikes. I mean, gosh, this could be another collapse of the real estate market, correct?
Yeah, I mean, it has to get worse. I mean, it really does. If you look at a chart right now, which I looked at this weekend, of the OECD nations, basically the manufacturing nations of the world, like Western Europe, North America, Japan. So their housing prices are substantially overvalued, and there's a trend line. So imagine a chart where there's a line, which is the average over the last 30 years. Well, you get way over above that, and then it has to correct and it comes down. Does it hit that average? Yes, but it overshoots it and it goes down, and then it acts like a magnet and pulls it up. So you'll have 2 steps forward, 1 step back, 2 steps forward, 1 step back. That 1 step back, as it overshoots the average, we still have probably a 30% correction plus 30 to 50% correction in the housing market, just based on averages and where they should be and how overbought the market is, right? It's been irrational exuberance. It's just, that's what happens when you have cheap money. It creates boom and bust cycles. This is just normal economics 101, right? So none of this surprises me, but this is the basis of Austrian economics, which Ludwig von Mises and others have talked about, which is what? You put too much money, it causes inflationary pressures. Ultimately, the market can't sustain those prices and they have to come down. That's the bust. So we're in a bust cycle. This is just normal reaction to an economy that's been flooded with cheap money for decades. So we just happen to be the generation that's alive while this is happening, right? So this is the problem that we're seeing moving.
Right. There's that saying, money is the root of all evil, but that's often misquoted. It's actually the love of money, and not just money in general. So as we weigh out all these things that are happening in the world right now, what are some biblical principles you think that we can start applying, and how to navigate these hurdles?
Well, number one, Proverbs tells us that a borrower is a slave to the lender, right? So get out of debt. In a rising interest rate environment, you need to get out of debt, right? And you need to have enough capital on hand to withstand a storm. So how much is that? Over time, I've found over the last 20 plus years that if you have about 3 months of expenses in cash, that's really what you need. Keep it in the bank, because if you have too much in the bank, well, then you're losing, because inflation unofficially is hovering over 20% right now. When you really look at the real metrics of how you measure inflation, well, you're only getting about 2% in your cash. So having too much means you're falling behind every month. Having too little affects your peace of mind, because you don't have enough for an emergency fund or for operating capital. So now, you have to have enough cash on hand just for emergencies or operating. Get out of debt. And then lastly, it's like, be a wise steward with what you have, right? So there's the parable in the Bible that the parable of the talents, and there were the 3 servants, right? And the first guy, he did good with what he had, and he basically used the talents that God gave him, and he expanded them. And the other guy did kind of okay, right? He was the one in the middle. And then the third one, what did he do? He was afraid to actually do anything, so he buried them in the sand. Just he didn't want to lose them. Well, in the parable, what did Jesus call? He didn't call him the stupid servant. He called him the wicked servant, right? Wicked is worse than being stupid.
Right.
So here's where, it reminds me of something that I heard Pastor Craig Rochelle talk about. I was with him at a conference over the weekend in Beaver Creek, Colorado. And he said something that really stuck with him. He said, the cost of inaction is almost always greater than the cost of a mistake, right? So as we move forward, we don't want to be afraid of a mistake, right? Like the wicked servant, right? Because the cost of inaction is always greater than the cost of the mistake. Meaning, you bury your talents in the sand, you don't do anything with it, because I don't have a long time horizon to recoup losses. I'm afraid of making a mistake, so you don't do anything with it, and you just lose and erode your portfolio because of inflation. But what are you missing? In economics, we call this the opportunity cost, which is the cost of your greatest foregone alternative, right? So what are you missing? For example, silver is up over the last 3 months, up over 10%, right? So that's up over 40% for a year. If you annualize that out, that's great. That's what you're missing by just sticking. You're not doing anything. Let's just say, okay, I've taken the first step. I'm not allocated into the stock market, into the bond market, because they're correcting, they're coming down. I'm just going to sit in cash. Well, okay, that's kind of okay, except you're losing. It's a guaranteed loss, because inflation is hovering greater than what you get on cash. But what are you missing? You're missing out on what the trend is now, 40% growth in silver annualized, right? You're missing out on a lot. So don't let fear cause you to do nothing, because the cost of doing nothing and making a mistake is not as much as what you're going to miss. That's what I would like to leave people with.
All right. And obviously, we want to make sure that we are diversified across all asset classes. So some people might think that they're diversified because certain things are going up or down in the stock market, and that can balance it out. But you actually want to make sure that you have things outside of the market, and of course, as well, gold and silver. Some naysayers would be like, "Oh, I've been hearing gold and silver forever." What do you say to those people that are saying that's always been supposedly the solution, and maybe they aren't buying it since there's other options like cryptocurrency, etc.?
Well, our goal is to minimize risk and maximize return, right? So with the march towards central bank digital currency, central banks basically coming up with their own cryptocurrency, which is loss of freedom. It's a loss of privacy. That's the end result of central bank digital currency. What are central banks doing? They're demonizing other forms of cryptocurrency, BlockFi, FTX, Bitcoin, Dogecoin, you name it. It's like, ooh, you don't want decentralized cryptocurrency. There's no safety in it. You want our version of it, which has rules and regulations and oversight and all keywords for we're spying on your bank account, right? That's what that means. So when you start to demonize everything else, because you can't make yourself look better, so you tear everything else down. That's one way to look good, is tear everything else down. So even on the next tax return that you're going to be filling out for 2023, there's all these intrusive questions about cryptocurrency. What kind of digital wallets do you have? How much have you spent? How much have you received, right? And if you don't answer these honestly, you're in big, huge trouble, right? So they're trying to make it hard and make it unattractive for people to invest in cryptocurrency. So general rule of thumb, what we want to do is easily minimize our risk, maximize your return. How do you do that? You look at the trends. And so in this digital world that we're looking at, one of the trends is, well, you could go into cryptocurrency or you could go into gold or silver, right? Because they're both can perform very well. One is safer, one is more steady, one has extreme highs and extreme lows, right? So what's the makeup of your investment profile, right? Most people don't want to have risk. To me, cryptocurrency is very risky right now because it's being demonized. So
with that being said, Joe, with that being said, if you were actually asked, should I dump I think BTC means Bitcoin, for silver? Should I dump my Bitcoin for silver? What would you say to that?
I would. I mean, but that's personality. I'd rather be safe than sorry, right? I would rather go into something that's steady, that has a tangible value. Silver's never gone to zero. Gold's never gone to zero. Oil or gas, they never go to zero because they're things, right? A cryptocurrency can go out of business tomorrow and it goes to zero. Even if cryptocurrency does it, what about the wallet that you have to, like FTX, right? It's like, oh my word. Mm-hmm. So there's a lot of different risk factors involved in cryptocurrency that you don't have with a tangible asset.
Right. Awesome. And if people want some personalized recommendations from you, they can just go to your website, right? KirkElliottPhD.com/KL and someone can give them a call and get some more information, right?
Absolutely. It's easy to do. Just fill out the online form and you'll be scheduled by one of our schedulers to meet with me or one of my amazing advisors, or simply call our number 720-605-3900 and say, Christy Lee sent me, right? So either one of those options will get you to us and will help you map out a strategy for success that'll get you out of the path of this hurricane.
What if people just have like preliminary questions? Is that first phone call? Is there a cost to that? Or is that just the first step? Or how's that work?
It's free. It's a free consultation, right? We don't know how to help you unless we ask you questions, right? You can't make a wise decision unless you have the information in front of you, right? So these consultations are free, and that's where we help map it out. And then you could say, yeah, let's do it, Kirk. That sounds awesome. That's what you're doing. Let's do it. Or you could say, not for me. Either one is just fine because it's your decision, right? Our goal, our calling, our anointing, our gifting is to help you, educate you on the reasons why you should do or not do something. And then the decision is always up to you.
Awesome. Well, thank you so much, Dr. Kirk Elliot, with me today. We're going to be checking in with you more and more because of all of the craziness that's happening in the world. That's the thing that I like about Dr. Kirk Elliot, is because he sees the full picture. He cares about the spiritual end of things, what's happening globally, instead of just like, I'm a financial advisor. You know what I mean? You look at the big picture, and I can appreciate that. And you allow that to work into how you make recommendations and your choices. And if that's something that you guys are interested in too, make sure you reach out, kirkelliottphd.com/KL, or just continue to watch from the sidelines, as we're going to be checking in with you a lot more and hearing from you. So thank you again for being on with me today.
You bet. It's my pleasure. We'll talk to you soon.
All right. Sounds good. Bye, y'all.